Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Well, in today's episode, we're going to treat this as if it was a live video. There's going to be very minimal editing. We got a lot to cover, and frankly, I wanted to wait as long as I could before making this video today. I didn't want to just put something out that I spent time editing everything, so this is going to be pretty raw, so be patient with me because we have a lot of exciting things to cover. So first things first, this was a monumental day, especially for Tesla. As you all know, this channel is all about investing against the grain. In other words, investing very large positions into single companies with a thesis of exponential growth, right? Very much ARK Invest-like type style of investing. And so that is what I've done with my portfolio. My fiance and I, we are essentially all in on Tesla. Besides real estate, everything we have is inside of Tesla. And so today was obviously a monumental day. Today marked the first time Tesla passed the $1 trillion market cap level. So first things first, cheers to everybody out there, all the Tesla holders, everybody who has ridden this out, everybody who watched it go up to 900 just to tank down to 500, and now we're back up here above $1,000 a share. So cheers to all of you. Ooh, nice burn. In case you're wondering, I'm drinking a black Manhattan. If you've never had one, I highly recommend whatever nice cocktail, craft cocktail bars, restaurants, whatever you might have in your area, ask for a black Manhattan. Absolutely beautiful drink, especially if you're a bourbon person. Okay, so let's go ahead and take a look at this this chart and let's figure out what happened today. So over here, we see the daily chart for Tesla. As you can see, at one point, we hit all the way up to 1,045. This, you know, if you can tell my background, it rained today. And I always say, days that it rains, it tends to be a very good day for me in my life. A lot of good things have always happened when it rained. And so, you know, I should have known that this was going to happen today. I did actually call this, if you guys recall, before Q3 earnings, I said that after earnings, I said it was going to go past 900 and rip higher above. And so although I consider that luck, and again, none of this is investment advice, it was something that I think was fairly predictable as far as what was going to happen. Now, again, everything I do, it's about long-term investing. But, you know, sometimes with long-term investing, you have to stop and enjoy the fun, enjoy these monumental moments. And so that's what we're doing today. So we can see here that it opened up pretty high, right? It opened up, you know, well into the 900s. We can see here about 940, 945. Actually, we could probably see over here. So it opened at 950, okay? And it got up to 1,045 and then a low of 944. And you can see here, after market, it's down a little bit, but it closed at $1,024 a share. So huge move. Now, with that said, what happened, right? What led to this catalyst? Because we had a 13% rise today, $115 per share jump today. So obviously something had to happen, and something did happen. So let's take a look at that real quick. As you can see here, Hertz made a big announcement. So today, Hertz announced that they are going to be investing and purchasing 100,000 Teslas for their rental fleet. This just has so many implications to it. There's so many ripple effects, and I want to try to cover it all. Again, my plan for this video is not to edit things in and out, so I'm just, you know, this stream of consciousness, I'm going to try to cover everything, but there's a lot of points I want to make. The first point I want to make is what we see right here. This is an initial order of 100,000 Teslas by the end of 2022. Initial. That means that there is arguably going to be more purchases ahead. And as we all know, everybody who is invested in Tesla and, you know, actually has done the homework of Tesla, demand's not an issue for Tesla, right? Demand to get a Tesla right now, you know, there are some models that it's essentially going to be a year out, right? The Cybertruck's pushed out, Model 3, standard ranges, right? The S, the X, it's a long list of a wait line. And not to give too much credit to CNBC, but sometimes they do say something that kind of resonates, and it's a good analogy or metaphor. And as an engineer, for those of you who don't know, I'm a software systems engineer, formerly a mechanical electrical engineer. But as an engineer, fundamentally, I always believe that if you actually truly understand a concept, or just if you understand anything to its fullest and in an in-depth level, you would be able to make an analogy or metaphor for anything. And so today on CNBC, I think it was Phil LeBeau. Yeah, Phil LeBeau. He made a analogy for Tesla and electric vehicles. And the analogy was that if you want to buy an electric vehicle, you don't ask, like, it'd be like if someone said, hey, I'm going to go get, some tissues. Everybody assumes Kleenex. If you're going to go get a Band-Aid, everyone assumes the brand Band-Aid, right? Escalator, it's the brand Escalator. And so the same kind of concept happens with Tesla. Sorry about that. You're going to see this. It's going to be live. That's my best friend. His birthday's coming up, as is mine, actually. My birthday's on Halloween, believe it or not. But anyways, with Tesla and electric vehicles, when someone says they're going to buy an electric vehicle, the first thing that comes to people's mind is a Tesla, right? Nobody asks, oh, what car are you going to get? If you say, oh, I'm going to get an electric vehicle, the majority of people assume you're getting a Tesla. So electric vehicle and Tesla are kind of synonymous now as far as a one-to-one, right? Just like Band-Aid and Kleenex have become like the de facto terminology. And so they said that today, and I thought, it definitely hit home as a good analogy for where Tesla is now and just as how they're seen within the market. Anyways, let's get back to this Hertz press release. So why is this a big deal? So to me, this is a big deal because it's very reminiscent of what happened with Bitcoin. So with Bitcoin, Bitcoin had a big surge. It was about, if I remember correctly, about $10,000 to $15,000 per Bitcoin. And then eventually we started to see some bigger known investors start picking up Bitcoin, adding it to their portfolio. And then we saw the likes of companies like a Tesla, like ARK Invest, start taking up some Bitcoin. And now we see countries picking up Bitcoin. And this is kind of the ground swelling that you start to see when there's a real adoption of a new technology. And I think this Hertz press release, this Hertz move into the electric vehicle market, aka Tesla, just shows that electric vehicles are the future, that it is happening, the change is happening quicker than people even know, and that this industry has officially awakened. I heard some people today on, if you ever watch Hit That Bid, great YouTube channel. It's pretty much always a live stream. I forget his name. He's from Canada. Absolutely amazing. I literally spent all day today watching him in the background, listening to him. But one of his super chatters said that today should be considered the end of the ice age. So in other words, end of the internal combustion engine age. I thought that was pretty clever. So I think this move by Hertz means more than just this 100,000 vehicles. I think this is more so of a inflection point for where we are in terms of electric vehicle adoption. And again, when you think electric vehicles, that means Tesla. Okay, and all right, so something else too. Keep this in mind. The new CEO of Hertz is the former CEO of Ford. So think about the implications of that. Obviously, he had connections at Ford. Obviously, he could have gotten a great deal. Obviously, Ford would have, dropped their pants and bent over to do whatever they could to get a deal like this, to get this type of publicity. Yet he went with Tesla. Why? He clearly said because Tesla is the only company out there that can make EVs at mass production, at volume production. And I think we see that worldwide to be true. Not only that, Tesla is the only company that can do it profitably. And we will get into that in a second. I want to scroll down here too. So what do we see here? Let me zoom in, because if you guys don't know who this person is, then you're living under a rock. This is Tom Brady. This is arguably the greatest, well, it's not arguable. He's the greatest quarterback of all time. He's the greatest football player of all time. Definitely the most awards, accolades, most Super Bowls, right? 7-time Super Bowl. Currently plays for the Tampa Bay Buccaneers. If you guys don't know, I've actually never talked about this. I've alluded to it. I live in downtown St. Petersburg, Florida. If you don't know, St. Pete is part of the Tampa Bay area. I live about a couple blocks away from where the Tampa Bay Rays, where the Tampa Bay's Rays Stadium is. If you guys have heard of a little company called ARK Invest, That's right, Kathy Woods. They're going to be moving their headquarters 2 blocks away from my house. If you guys don't know about St. Pete, I highly recommend that you guys check out downtown St. Pete. This isn't me advertising. I feel as passionate about downtown St. Pete and St. Pete in general as I do about Tesla. I am hyper bullish on this city. Again, if you don't know much about it, St. Pete is essentially the Austin meets San Diego meets Charleston of Florida. I lived in Florida for a long time in my life, and I never discovered St. Pete until maybe 7-8 years ago. And I've been living here ever since. I can't stress how amazing the city is enough. And if you don't believe me, I mean, ARK Invest is moving their headquarters here, so that should say enough. Tom Brady, Rob Gronkowski, they live here, right? That should be saying enough. And of course, you know, my fiance is from Boston, so you know, all of that, you know, just a lot of good synergies there, a lot of positivity there with regards to Tom, the Bucks, the branding here with Tesla now, absolutely phenomenal. Anyways, this isn't to talk about St. Pete and Tom and the Buccaneers, although great record, 6-1. But the power of this, there's no denying the power of Tom Brady and the Brady brand in general. Okay, they're synonymous with, you know, the likes of TB12. They're synonymous with Aston Martin, right? Just very high-end luxury brands. And what we see here is just a nod to not only Tesla and Hertz, but what we see here for Tesla is one of the most ultimate free advertisements you could ever get. Keep in mind, Tesla does not pay for advertisements or marketing or commercials. They don't do anything of that sort. It's literally other companies that do the advertising for Tesla. Okay, whether it's any news media outlet there who wants to spread FUD, but they constantly want to talk about Tesla because Tesla gets clicks and likes and views. Whether it's video games putting every Tesla vehicle and even the gigafactories into their video games. Or it's something like this with Hertz, who's trying to make a splash after they came out of bankruptcy by making this move with 100,000 new Teslas. And just to, you know, put a pin on it, let's put Tom Brady in here as well, because what else gets more attention than Tom Brady? Oh yeah, Tom Brady plus Tesla. So this is absolutely amazing for Tesla. The amount of free publicity that this gives is just insane, right? So this whole purchase, this order, it's going to have so many ripple effects. We're going to see these commercials, you know, probably during the Super Bowl, just because I think the Bucks are going to make it to the Super Bowl again. But we're going to see it throughout the whole season. We're going to see all of these commercials. And what else is interesting is that Tesla, in my opinion, is one of the, if not the most disruptive company out there in the world right now. And Tom Brady's making a commercial for it. What else has he recently made commercials for? Crypto trading funds, right? The platform that he's now creating with Giselle, right? So he's arguably, you know, into some of the most disruptive industries, and you know, associating his name, his brand with those. So whether it's, you know, Bitcoin, Ethereum, just crypto in general, it's Tesla, right? This matters. You know, it's because there's something synonymous between someone like Tom Brady, who is a just bona fide winner in anything he does, whether he's in New England, whether he's down here in Tampa Bay, it doesn't matter. Tom Brady wins. And what he's saying with crypto and what they're doing with Tesla, right? He's not just going to throw his name brand behind anything. All right, enough of my Tom Brady love affair. Let's move on. I want to talk about what I know is going to be the narrative moving forward. I already saw some of it today, and it's these naysayers saying Tesla's overvalued. It's going to come crashing down. It's way too expensive. It's way overpriced. It's the equivalent of all the other automakers, and I'm here to tell you they are wrong. And how are we going to prove they're wrong? Well, I'm an engineer, so the only way I know to prove people wrong is with something called math. And so right now, we're going to go do some math. Let's take a look at what I have prepared here. It's a little model, so let's jump into it. So let's take a look at this little quick and dirty model I put together. And so what this is going to be is comparing Ford and GM Q2 to Tesla's Q3 revenue, operating income, and operating margin. Now, Ford and GM, their Q3s aren't out just yet, so, you know, just going to call that out right now. So you can say it's a little unfair, but the numbers are the numbers. If anything, these numbers for Ford and GM might actually be better than what they are going to be in Q3. So, I think all things equal, this should still be a fairly good representation of, where things are. All right, so let's start with Ford. So in Q2, Ford had $27 billion in revenue. So that's a nice chunk of revenue. GM had $34 billion in revenue. And Tesla only had $14 billion in revenue. Now, keep in mind, Ford and GM, they're selling millions of vehicles. Tesla didn't even sell 250,000. Okay, they're at 241,000 vehicles. So they didn't even scratch the surface of Ford or GM with the volume of vehicles they have. So just as far as what was sold, Tesla so far behind Ford and GM, like not even close. Like they are a speck on what Ford and GM are as far as sales from the given quarters. So let's take a look at the operating income. So operating income, we can see Ford came out with $1.1 billion. So effectively off of that $27 billion, their operating income came out to $1.1 billion. Not that great. For GM, with $34 billion, they walked away with $2.8 billion in operating income. Again, better than Ford, tell you that, but it's, call it average for an auto company. Now, Tesla with $14 billion, I mean, we can see here what GM and Ford are doing, right? It took them $34 and $27 billion in order to get these type of numbers, right, in the billions. So you would think that with Tesla at $14 billion, maybe they're a couple $100 million, right? Or, if you look at Ford, right, they're essentially exactly half of what Ford's number is. Ford's at $1.1 billion off 27. So if we're half of that, you would think we're maybe 500 or 600 million, right? So if we look at Tesla came away with $2 billion in operating income. $2 billion. They beat Ford, even though Ford had essentially twice the amount of revenue. So how can this be? Look at GM. They sold $34 billion. This is over twice what Tesla did. And they only walk away with $800 million more in operating income. So what is happening here? Well, I'll tell you what, it's this. Operating margin. This is what people don't understand. Tesla is a margin machine, okay? This is operating margin. Now, for automotive margins, Tesla's just cracked 30%. If we get rid of credits, they're looking at about 28%, right? Ford and GM cannot compete against that. These margins that Tesla is coming up with are unheard of. Okay? That is why Tesla is just dominating the industry. This is why Tesla is dominating when it comes to their operating income, just their income in general, is because they have so much margin power. It's all about the margin. They are doing not even 250,000 vehicles, 241,000. Well, these guys are doing millions and millions, right? This is the difference. It's all about the margin. So this is a very basic way of looking at it to understand why Tesla has this high valuation, because it's not just the fact that they have $2 billion operating income, but keep in mind, they have arguably they have a lot more coming online. They have Giga Berlin, Giga Austin, which, as far as what we know, can each output about 2 million vehicles. Giga Shanghai is about to ramp up to about 1 million vehicles probably in 2022. Fremont, right, the California factory, they want to increase that by another 50%. So that could come out to anywhere from 750 to 900,000 vehicles a year. So there's so much more volume Tesla's about to come online with. It's not going to happen overnight, at the snap of a fingers, but by the end of 2022, 2023, 2024, 2025, we're going to see this huge juggernaut of a machine start to roll out. So let's take a look at this from another perspective. This is another little model I made. Again, the whole point of me showing these is to show you that Tesla is not overvalued. If anything, it's far from it. So here, I named this whole spreadsheet, I named Stating the Obvious. I did it just for this video, just because it's frustrating to me that people keep saying that Tesla's overvalued, or their numbers don't make sense. And again, it's just math, people. This isn't that hard to figure out. By 2025, vehicle production for Tesla will probably be about 5 million vehicles. Okay, if you don't think we can get to that, look, it's pretty easy. Giga Berlin, 2 million. Giga Austin, 2 million. Shanghai, there's another million easily. That's 5. Throw in Fremont to make up any delta between that, right? That might be another anywhere from 6 to 950. So that's, a potential, just under 6 million vehicles. So 5 million should be pretty conservative. ASP, that stands for average selling price. Average selling price as of Q3 was $51,000 per vehicle. Now, if you don't think that in 2025 this will be at this, you think it'll be lower, don't worry, we're going to play with these numbers in a second. But let's just for this argument's sake, let's just stick with 51,000 because that's what's currently at. Margin reached 30% with credits. Without credits, it was about 28% for vehicle margins. Again, we're just going to keep it here. We'll play with this in a second. But if you really think margins aren't going to keep going up, I think you're insane. I mean, just from the sheer basic obvious facts of 4680 battery is going to cut the battery costs down in half. The fact that Giga Berlin, Giga Austin, just the manufacturing process is going to be better. And on top of that, they're going to be leveraging the Giga Press for the front, for the rear, and for the structural pack, right? I mean, that's huge. The fact that they're not going to have to ship from China to Europe, right? There's going to be more localization within Europe with Giga Berlin, right? So it's going to be less cost to ship vehicles. The fact that Giga Austin is going to be able to ship even less for the East Coast of the United States, right? It's less of a distance. So all these things are going to impact it, and margin's going to go up. And we're not even talking about software or anything of that nature, right? We're just talking sheer automotive business here. So I'll leave that 30% because, again, I think that's very conservative. This will probably end up being about 40% come 2025, unless they decide that they just want to make vehicles at a less cost, give up some margin so that they can have even more dominant market share, right? There's a lot of things they can do. PE ratio, we'll just say 75. I think that's beyond fair for a company growing at this rate. And we can see here what they have for shares outstanding. So if you do all this math, right? Now I'll show you what the math is, right? So essentially all we're doing is taking the total vehicles here. Well, I guess you can't see the whole equation here, but we're taking the vehicles times by the average selling price, right? We'll take 30% of that, multiply by 75 PE ratio, and then divided by the total amount of outstanding shares, we get $5,737 per share by 2025. In other words, almost a $6 trillion company. We just passed 1 trillion. This is purely automotive is what we're looking at here. All right, but you might be saying, oh, your numbers are inflated. Okay, sure. But let's say I am inflated on my numbers. Let's drop this from 5 million down to 4 million. To 4 million. What happens? We're at 4,590. That's still a $4.5 trillion company, right? That's over a 4x from where we are today. You think average selling price is going to go down, right? So they're not going to make as much money. All right, what do you think is going to go down? Let's go down to 40,000 a vehicle. All right, we're at $3,600 a share. That's a $3.6 trillion company. That's over a triple of where we are today. You want to drop the margins down? I don't know how that could possibly go down, but sure, let's drop it to 25%. Still a $3 trillion company, a tripling from where they are today, right? I mean, no matter how you look at this, Tesla right now, even though they just got to all-time highs, even though they just passed $1 trillion mark, they are cheap. If I were to tell you, hey, you put money into company X, right? And we are essentially in 2022, right? We're at the end of 2021. And by 2025, in about 3 to 4 years, you will be able to triple your money. Every single one of you would throw everything you have down if I told you you were going to triple your money. Now, none of this is investment advice, but this is the math. This is basic math. I mean, if you have to complicate things to create your evaluation or your model, you're probably not doing something right. This is a very straightforward and very simple, and this is using the numbers that we see today. It's not like I'm saying, hey, they're eventually going to get to this margin. Eventually, they're going to sell these cars once they build these factories. The factories are built. The margin's already happening. The average selling price is already happening. Okay, the thesis of Tesla being $1 trillion company, that's over. It's happened. We hit that today. So this is the stuff people don't see. Now, again, let's put this back to where I had. So again, I said 5 million vehicles. I think that's conservative considering that they could almost make 6 million by 2025. Average selling price, I don't see this dropping much, but let's leave it at 40,000. Why not? Margin's probably going to go up, but let's just leave this at 30%. I really doubt it's gonna go down. That puts you at $4,500 per share. Okay, that's over a quadruple in today's price. Over. In a matter of a few years. This is a no-brainer. Now, keep that in mind. 2025, these are the numbers we're looking at. Let me show something else that if this doesn't resonate with you, I think this next thing will. Okay, now, this constant comparison of Tesla, all these other automotive companies, the valuation, it is not equivalent. In other words, as we can see here in this new model, it's not apples to apples, it's apples to oranges. What am I talking about here? Well, let's break down what Tesla really is. And I want to start to paint this picture for you of why Tesla is at such a discount, even at these levels, even at $1 trillion of market cap, $1,000+ a share. First things first, we'll talk about Tesla Motors. That entire exercise we just went through, where we had a $5,700 a share by 2025, the $4,000, the $3,000, right? We played with the numbers. No matter how we looked at it, we saw a tripling, a quadrupling, quintupling of the stock price by 2025, right? That is Tesla Motors. That is the automotive segment of Tesla. That would be the equivalent of Ford, GM, VW. And even if we just use this comparison, you can see based on the math we just did, because of the margins Tesla has, because of how cost effective, how efficient they are, that is why it makes sense to have their valuation where it is today. But here's the point of why Tesla is so cheap today, why it is just at a severe discount, at least from a bull thesis. Now, keep in mind for what we're about to go over, you have to believe in the story. And if you don't, that's fine. You don't have to believe in the story. Based on what I just showed you alone, you should believe in the Tesla Motors story as far as being able to make more within your investment, right? To double, triple, quadruple your investment in a few years. But go along this ride with me. Right now, Tesla Motors, based on what we just showed, is equivalent of Ford, GM, or VW. But what else comprises Tesla? Because Tesla's not just an automotive company. I'm assuming you've heard that line before. Well, Tesla is also very vertically integrated. Okay, so a lot of the things that you see with Tesla, soon to be batteries, their chairs, right? A lot of the things that they do, it's in-house, right? They take it from within. Their chip designs, right? A lot of it, they bring it inside. They either manufacture themselves or they design it themselves to be manufactured. So this is a big part that differentiates them from Ford, GM, VW, etc. So in other words, all the third-party companies that the automotive companies use, you have to factor a lot of that into the Tesla valuation, and we don't. However, I guess you can make an argument that we kind of do because that's why Tesla has such great margins. What else makes up Tesla? Batteries. Okay, not just the fact that Tesla makes batteries themselves, but eventually Tesla could start to sell batteries themselves, right? And just alone the margin that all these other companies make from selling batteries, right? Think of CATL, Samsung, Panasonic, right? They obviously make a lot of money. Well, if Tesla is making batteries in-house, that means they're making that money. So built into the valuation, you're going to have to assume a CATL, a Samsung, a Panasonic, right? You're going to have to assume that into the valuation. What else? Well, superchargers. Tesla has the largest network of superchargers in the world and the best and most efficient and easiest to use and, well, arguably the only one that actually works. So that is something that you're going to have to take into account, especially now that Tesla's about to open it to other vehicles, not just for Teslas. And what is that going to do? Well, that's going to allow them to generate more revenue so that then they can go out and spit out more supercharge stations, networks, etc. So you have to consider the Shell and BP-like aspect of that, right? Tesla is essentially the gas station. That's major. Insurance. Tesla is now in California and Texas, the two largest states by population in the United States. Next is probably going to be Florida or New York, I would imagine, because it seems like they're going based on the largest populations. But when Tesla brings insurance in-house, well, now you got to start thinking about Geico and Allstate. What else? Full self-driving. Now, no, this one's controversial. A lot of people don't think this exists yet, but it's getting there, and it's getting pretty damn close. Even if it doesn't come until 2025, who cares? It's coming, and that's the reason that you invest now, right? If you invest once the product's done and everything's out and it's complete, you've missed your opportunity. It's too late. So as far as full self-driving, the power here, it's very Netflix-like, because full self-driving will come with a subscription of $200 a month. In other words, imagine your Netflix model, but with $200 a month instead of your $10 to $12 you pay a month. Add that into the Tesla valuation. Now you start seeing where we're going with this. Robo-taxis. Well, if full self-driving has happened, well, now robo-taxis are going to happen. And now what do we think about that? Well, the natural thing to think about with robo-taxis is Uber and Lyft. So now we have to factor in a valuation of Uber and Lyft into Tesla, right? Even if you don't value all of it, you have to value a portion of it. And arguably, the margins are going to be crazy because they don't have to split anything with the individual. Not only that, they're making the vehicles in-house, right? The whole vertical integration, like this machine is getting crazy, and they don't have to pay the subscription service because they are the subscription service. Then there's Tesla Energy. Okay, Tesla Energy is a big deal. Tesla Energy is going to, according to Elon, potentially be bigger than even Tesla Motors. And we just saw where Tesla Motors was. Tesla Motors, by 2025, we saw anywhere from 5,700 a share all the way down to 3,000 a share when we try to make it as conservative as possible. So that's $3 to about $5 trillion by 2025. Tesla Energy is just getting started. Okay, it is just ramping up. So we'll see where that is by the end of the decade. So this is a major thing to take into consideration. And if you want to value this, think about your electric company you use today. All right, I use Duke Energy. FPL is pretty popular here, but think about what you use, who you pay electricity to, right? That may be a big part of the story for Tesla, or it will be. I mean, it already is in Australia. Dojo as a service. For those who don't know, Dojo is the supercomputer, arguably the most powerful supercomputer in the world that Tesla has built in-house, right? They've designed everything from the chip, the hardware, the software, everything they've built internally. Now, the whole point of Dojo, it's a very specific purpose-built supercomputer, and it's to train neural nets. Neural nets is, just think of it as coding 2.0. All right, where coding is, currently done, whether it's Python, C++, Objective-C, whatever it is that you use to code, whatever program language you use, neural nets and what Dojo would be doing is like coding 2.0, right? So it's essentially the machine building the machine training the machine. So it does things that humans can't do, and that's why it's so important for full self-driving. But assuming full self-driving happens and robo-taxis happen, well, that means Dojo was a success. And so with Dojo, once full self-driving is figured out, they're already working on, so during AI Day, they already talked about they're working on the second Dojo computer now, right? So they're already iterating on what they've currently have, but that's not even in production yet. But that means that they'll be able to start offering this as a service to other companies who want to train neural nets. They even alluded to this during Tesla AI Day. So with Dojo as a service, what we're really talking about is a potential AWS-like model. We have to factor this in as well, right? Again, we're trying to invest in a company before all the value is, realized. That's how you make these big-term gains over the long run. So factor that in. I'm not saying, again, that it's going to be exactly the current market cap of AWS, but there is a proportionality of it that will be very reflective of the AWS model, right? All of these are the same way. Then there's Optimus. Now, this is the one that you might be like, all right, Nick, you're just, going off. I don't know what you're drinking, whatever that Black Manhattan is, which is delicious, by the way. Oh, yeah. Optimus is, the newest announcement from Tesla, and they did during AI Day, which was centered around recruiting the best and brightest out there when it comes to AI. And they actually saw a 100x increase in their applicant pool. So that was wild. But if you want to factor this into the model as well, just think of all of human labor. So what am I saying here? What I'm saying is that what we just looked at between 2025 with that, almost 6 trillion all the way down to 3 trillion. Currently we're sitting at 1 trillion figure. That was just this piece, just Tesla Motors. We haven't accounted for all of this here. Okay, I showed you the math. I showed you the margins. I showed you what they're selling for, right? Like these numbers, this is very basic. This is adding, subtracting, multiplying, dividing. There's nothing complicated here. But none of this is being recognized yet. This will all exceed where we are right now. I mean, we're going to see numbers we have never seen before. This is why when I say that by 2030, we're looking at a $10+ trillion company. Like, this is why. You can see it here. Like, I'm not crazy. I mean, we just crossed 1 trillion. People said I was crazy when that happened. When Tesla was at $500 a share, people were telling me, oh, Tesla's move is over. They're done. That's it. They're just going to move sideways. But look where we are today. Everybody, I know we just passed this milestone, which again, cheers to Tesla. Cheers to every investor out there. What a great, exciting day. But keep in mind, we are just getting started. This is the early innings. We just got out the gate. Now is where the real fun happens. Now is where we really start to see that snowball work. Okay, this avalanche just started. Now it's going to grow and build, and we're going to see new heights. Listen, I appreciate everybody sticking to the end here. Do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. I appreciate your support. Hopefully you enjoyed this episode. It was a fun one for me. It's a very exciting day. Again, cheers to every investor out there. Cheers to all the Tesla bulls. Cheers to all the shorts, Thank you. You guys gave us a lot of opportunities to get in over time and, dollar cost average. So thank you to everybody. And, special shout out to Elon. I imagine you're probably smirking a little bit today. Okay, we're going to leave it there, everybody. Thanks again. I love you all. Peace.